we saw reopening in May, and activity had started to come back pretty well, more actually than people thought it would come back in terms of our business contacts. And over the past week or so, there's been some leveling off. And I think it's probably due to the increase in cases, not only in Ohio, but across the country.
So how do you think about what the shape of recovery at this point looks like and how fast it's going to come?
Yeah, so I've always been thinking about this in terms of phases. So the first phase, of course, was the shutdown, where activity just was basically turned off. And now we're in sort of this reopening phase. And I guess I always anticipated that this would not be a smooth reopening. It's going to, go up and down with how the virus is contained or not contained. And we're still in that part. Once we get sort of reopening and more of the economy, then we're still in this long recovery phase where I think it's going to take quite a long time to get back to where activity and employment was pre-pandemic. And of course, there's going to be structural changes that the economy is going to have to work through too. So we're pretty early on, even in the second phase of the reopening phase. And I just think there's going to be a long road back to where we were in February. And I think, that's why the Fed has been saying we're there with our tools, and we anticipate having very accommodative monetary policy for quite some time in the future, because it's just going to take a long time to work through this.
So are you suggesting there, President Mester, that means no tightening, no reversal of the policies that the Fed has already got in place, or are there going to be extra measures taken that we haven't seen yet?
Well, I think it's going to depend on how things play out. We are committed to using all our tools to support getting back to our dual mandate goals of price stability with inflation at 2% and full employment or maximum employment. We're well away from both of those right now. And I think we're there, as everyone else is trying to, follow the virus. The virus is going to be a determinant of all this, following how our firms are able to come back and rehire. Employment is key here. And making sure that, we're doing all we can with our tools to support the recovery. I think that, a large part of this is going to be driven by whether we have tools for testing, for contact tracing, for therapeutics, and ultimately for vaccine. And so we're going to have to see how that plays out to see what more we should be doing. Our programs are in place to make sure that credit is available for households and businesses. And of course, our interest rate tool is at the zero lower bound or effective lower bound right now. So, we're there. We're trying to support the economy with the tools that we have. And the federal government is doing the same thing, taking aggressive action early on as well.